Stop what you are doing right now. I need your complete attention for the next few minutes because what I am about to show you will change how you see everything. This is not normal. This is not how markets work. And if you do not understand what is happening right now, you will become the victim of the biggest wealth transfer in modern history. Silver just crashed. I'm not talking about a small dip. I am not talking about normal market volatility. I am talking about a brutal, aggressive, coordinated crash that wiped out billions of dollars in a matter of hours. The price plummeted. Charts turned blood red. Financial media celebrated. Headlines screamed that silver was collapsing, that the bull market was over, that holders should sell immediately before it gets worse. And millions of people believed them. Millions of people panicked. Millions of people sold their silver at the worst possible moment. But here is what those headlines did not tell you. Here is what the financial media conveniently forgot to mention. Here is what they do not want you to know. While the price was crashing, while the charts were bleeding, while everyone was panicking and selling, something impossible was happening in the real world. You could not buy silver. Let me say that again because I need this to sink into your brain. The price crashed. And you could not buy silver anywhere. Not from the US Mint. They suspended sales. Not from the Perth Mint. They paused orders. Not from the Royal Mint. They ran out of stock. Not from dealers in India. They defaulted on deliveries. Not even from Costco. They implemented purchase limits. The price said silver was cheaper. The real world said silver does not exist. Does that make sense to you? Does that sound like a legitimate market? In any normal market, when price crashes, supply increases. Sellers come out of the woodwork. Product becomes available everywhere. That is basic economics. That is how supply and demand works. But that is not what happened here. Here, the price crashed while supply vanished. Here, the price went down while the whole world ran out. Here, the computer screen said one thing while reality said the complete opposite. One of them is lying to you, and I am going to show you exactly which one. Welcome to Finance Currency. If you are new here, this is where we expose what is really happening in markets while everyone else reads you the headlines. We go deeper. We look behind the curtain. We show you what the financial media refuses to show you. Subscribe right now because the information in this video could save you from making a devastating mistake. Hit that notification bell so you never miss an update. And if you find value in what I am about to show you, smash that like button. It helps the algorithm show this to more people who desperately need to see it. Now let me tell you why this crash is not what it seems. Let me show you the evidence that will make your jaw drop. And let me explain why the people crashing silver are the same people secretly buying every ounce they can find. First, I need you to understand something fundamental. There are two silver markets, not one. Two. And these two markets are telling completely different stories right now. The first market is the paper market. This is COMEX. This is where futures contracts trade. This is where banks and hedge funds and institutions move billions of dollars every single day. But here's the critical thing you must understand. They are not trading real silver. They are trading paper promises, digital contracts, numbers on a screen, bets about what silver might be worth at some future date. Most of these contracts never result in actual delivery. They are settled in cash. They are rolled over into new contracts. The physical metal never changes hands. The paper market is like a giant casino. Billions of dollars change hands every day. But at the end of the day, most players never see or touch any actual silver. They are trading the idea of silver, the concept of silver, the digital representation of silver, not real silver. The second market is the physical market. This is where actual silver trades. Real metal. Coins you can hold in your hand. Bars you can stack in a safe. The stuff that exists in the real world. The stuff you can touch and feel and verify. Now here's the critical point that changes everything. These two markets are supposed to be connected. The paper price is supposed to reflect what physical silver is actually worth in the real world. But right now, at this very moment, they are completely disconnected. The link is broken. The paper market says silver is crashing. The physical market says you cannot have any at any price. The computer screen says sell. The empty shelves say there is nothing left to buy. Which one do you believe? The digital number created by banks trading contracts they never intend to deliver? Or the physical reality of mints closing, dealers defaulting, and vaults draining? I know which one I believe. And by the end of this video, you will too. Because what I am about to show you is not theory. It is not speculation. It is not opinion. It is documented evidence from the most reputable sources on the planet. It is data that proves beyond any doubt that the silver market is broken. It is proof that what you are seeing on your screen is not a real price. It is a magic trick. And I am about to show you exactly how the trick works. Stay with me. Pay attention. Take notes if you have to. Because understanding what I am about to reveal could be the difference between building generational wealth and losing everything to people who understand this game better than you. Let us start with the evidence. Let me show you what is actually happening around the world right now. And pay very close attention because each piece of evidence I am about to present builds on the last. By the time I am done, you will see a picture that the mainstream media absolutely refuses to show you. Let us start with Australia, the Perth Mint. This is one of the largest and most respected mints in the entire world. They have been producing gold and silver bullion for over a century. Governments trust them. Central banks trust them. Institutional investors trust them. They just suspended sales. I need you to understand what that means. This is not some small dealer running low on inventory. This is the official government mint of Australia, one of the largest silver-producing nations on the planet. And they cannot keep up with demand. Their internal notice said it clearly: increasing worldwide demand, large backlog of orders, pause on wholesale orders. They are not offering discounts. They are not having a sale. They are rationing. They are implementing monthly allocations to ensure all regions receive stock. That is shortage language. That is crisis language. And this was happening even before the crash, when silver was trading higher, when everything looked fine on the surface. Now think about what happened after the crash, when silver dropped 20% in days. Every smart investor in the world saw a massive discount on an asset that mints cannot even keep in stock. What do you think they did? They bought. They bought everything they could find. The crash did not reduce demand. It created a tsunami of new demand. And the Perth Mint was already at breaking point. Now let us move to the United States, the U.S. Mint, the official government mint of the United States of America, the institution responsible for producing American silver eagles, the most recognized silver coin in the world. They suspended sales. Their website showed products as temporarily unavailable. When you called customer service, they told you they were updating prices. But here's what actually happened. Silver prices moved so fast that the mint could not keep up. They were losing money on every sale, so they stopped selling entirely. And when products came back online, the price had jumped dramatically. Massive increases overnight. This is the United States government telling you they cannot sell you silver at the old prices because those prices do not reflect reality. The paper market says one number. The US Mint says that number is a lie. Now let us go to India. India is one of the largest silver markets in the entire world. Silver is not just an investment there. It is cultural. It is religious. It is woven into the fabric of society. And right now, dealers are not just running low on inventory. They are defaulting on deliveries. Let me make sure you understand what that means. People are placing orders. They are paying money. And they are not receiving their silver. Dealers are taking payments and failing to deliver. This is not a supply issue. This is a breakdown of the physical delivery system. Headlines are screaming it. Not a sliver of silver available. Amazon sellers defaulting on deliveries. Orders canceled after payment was already accepted. People paid for silver and got nothing. That is not a functioning market. That is a system in collapse. Now let us look at Britain, the Royal Mint. This is one of the oldest mints in the world. They have been producing coins for over 1,000 years. 1,000 years of history, 1,000 years of reliability. Out of stock, silver bars gone, even the basic formats, even the most common products. A mint that has operated for a millennium cannot keep silver on the shelves. And it gets even more bizarre. Costco. Yes, Costco, the wholesale retailer, the place where you buy bulk groceries and household items. They sell silver bullion, and they just implemented purchase limits. Costco, a company built on the entire concept of buying in bulk, a company whose business model is selling large quantities at discount prices. They are limiting how much silver you can buy. They are rationing. Let that sink in. A company famous for letting you buy 24 packs of everything is now telling you that you can only buy a limited amount of silver. Why would they do that? Because demand is overwhelming supply, because they do not have enough product, because they have to ration what little they have. Now let me show you what is happening in China, and this is where it gets truly alarming. The Shanghai Futures Exchange data is public. Anyone can look at it, and what it shows should terrify you. Tens of metric tons are being removed from the vaults, not over months, in days, in single trading sessions. The drain rate is accelerating. At current rates, the Shanghai vaults could be completely empty in weeks, not months. Weeks. For context, annual global silver demand is over 1 billion ounces. What remains in those vaults is a tiny fraction of that, a rounding error. And nobody in mainstream financial media is talking about this. Absolute silence. Now here's what makes this truly frightening. China has restricted silver exports. They have classified silver as a strategic national security asset. They treat it the same way they treat rare earth minerals, the same way they treat materials for weapons and advanced technology. So think about what China is doing. They are restricting exports. No silver leaves their borders, and they are draining their own exchange vaults, taking physical delivery, moving metal from public warehouses to private storage. They are hoarding. While the paper price crashes, China is taking physical delivery of every ounce they can find. They know something. They know what is coming, and they are preparing. Now let me tell you who is doing the selling. This is the most important part of this entire video. Pay very close attention to what I'm about to explain because this is how the game really works. Nearly all of the selling during this crash occurred during US market hours. Not Asian hours when Shanghai and Hong Kong trade, not European hours when London is active, US market hours, when New York wakes up, when COMEX opens. Here is the pattern. When New York opens, silver dumps, aggressive red candles, massive sell orders, price collapses. When New York closes, silver stabilizes, sometimes it even rises during Asian trading. Then New York opens again, and the selling resumes. This pattern repeated every single day during the crash. It is not random. It is not natural market behavior. It is coordinated. The United States sells and dumps digital derivatives, paper contracts, promises that will never be delivered. The rest of the world buys and accumulates physical metal. Stop for a second. I need you to really think about what I just said. American banks are selling something they do not have. They are creating digital silver out of nothing. Pressing buttons, moving numbers on screens, manufacturing supply that does not exist in the physical world. Meanwhile, people in Asia are loading physical bars onto trucks. They are taking delivery, they are draining vaults, they are removing real metal from the system. One side is playing a video game, the other side is taking home the prize. The paper price goes down, the physical metal disappears. This is not new. This has been the pattern for years, for decades even. The West sells paper, the East buys physical. But right now, it is happening more aggressively than ever. The disconnect between paper selling and physical buying has never been this extreme. This is not a free market. This is a rigged game. And if you do not understand how the game works, you will be the victim of it. You will sell your physical metal at the bottom because the paper price scared you, and someone in Shanghai or Dubai will happily take it off your hands at a fraction of what it is truly worth. Do not be the victim. Be the one who understands. Now let me show you more proof. Lease rates. Lease rates are what it costs to borrow physical silver. In normal markets, these rates are near zero, fractions of a percent, basically nothing. Right now, silver lease rates have exploded. Reports show rates at extreme levels. Some sources cite numbers that would have been unthinkable just months ago. What does this mean? It means physical silver is so scarce that holders are demanding massive premiums just to temporarily lend it out. When lease rates spike like this, it means the physical market is broken. It means there is not enough real metal to go around. It means institutions are desperate to get their hands on physical silver and are willing to pay extraordinary amounts to borrow it. This is a panic signal. This is the market screaming that something is very wrong. Now let me connect all of this together for you. What we are witnessing is a complete breakdown of the paper-silver pricing mechanism. For decades, the price of silver has been set by paper trading. Banks trade hundreds of millions of ounces of paper silver every day. The actual physical market is tiny by comparison. This has allowed the paper price to be manipulated, suppressed, controlled, but now something has changed. Physical demand has overwhelmed the system. Mints cannot keep up. Vaults are being drained. Dealers are defaulting. Lease rates are exploding. The paper market says silver is crashing. The physical market says there is no silver available at any price. Eventually, one of these has to give. Either the paper price rises to reflect physical reality, or the physical market completely breaks down. I believe we are approaching that breaking point. Now let me give you some historical context. Silver has been in a deficit for years, multiple consecutive years. Demand has exceeded supply every single year. Let me break that down simply. Every year, the world mines a certain amount of silver, total global mine production. But every year, the world consumes more than that. Industrial demand for solar panels, electronics, electric vehicles, medical devices, and countless other applications. Investment demand for coins and bars, jewelry demand. Total demand exceeds total mine supply by hundreds of millions of ounces every year. Where does that extra silver come from? It comes from above-ground stockpiles, vaults, reserves, recycling. Inventory built up over previous decades. Think of it like a bathtub. New mine supply is the water coming in from the faucet. Demand is the water draining out. For years, more water has been draining out than coming in. The bathtub is emptying. Those stockpiles are now running dangerously low. The buffer is almost gone. The vaults are at critically low levels. There is no more slack in the system. No emergency reserve to tap into when demand spikes. And now, with mints suspending sales and dealers defaulting, we are seeing the consequences of years of deficits finally catching up to reality. This is not a short-term issue that will resolve itself next week. This is a structural problem that has been building for years, and it is accelerating. Now let me tell you what this means for you, because understanding the situation is useless if you do not know how to act on it. And I am going to be very direct here. No sugarcoating, no vague advice. Specific guidance based on where you are right now. If you are holding physical silver, do not panic. I repeat, do not panic. Do not let the paper price scare you into selling your metal. Look at the facts. Mints are suspending sales, dealers are defaulting, China is hoarding, vaults are draining, lease rates are exploding, and you are sitting there holding the one thing the entire world is scrambling to get. The paper price is noise, it is manipulation, it is a number on a screen controlled by people trading contracts they never intend to deliver. Your physical metal is worth what someone will actually pay for it in the real world. Right now, that is far more than what the paper price says. Hold your metal. Do not be fooled. Do not let them scare you into giving up your position at the worst possible moment. That is exactly what they want. That is the entire point of crashing the price. To shake out weak hands. To transfer wealth from emotional retail investors to patient institutional accumulators. Your fear creates their buying opportunity. Do not give them that opportunity. If you are holding paper silver, ETFs, futures contracts, mining stocks, you need to ask yourself one critical question. If everyone demanded physical delivery tomorrow, could your counterparty actually deliver? Could the ETF actually hand you silver bars? Could the futures exchange actually fulfill all the contracts? The answer is almost certainly no. There is not enough physical metal in the system to back all the paper claims. You do not own silver, you own a promise, and promises break. Consider whether you want to continue holding promises or whether you want to hold the real thing. If you are looking to buy physical silver right now, good luck. I say that with complete sincerity. Physical premiums are exploding around the world. Different regions are seeing premiums of 40, 50, 60% over the paper spot price. The paper price says one number. The real world price to actually acquire physical metal is dramatically higher. If you can find physical silver at reasonable premiums, consider yourself lucky. That inventory will not last. And here is the paradox that should blow your mind. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand. More demand drains supply faster. The crash is making the shortage worse, not better. Every time they dump the paper price, they accelerate the physical shortage. They are running out of runway. Now let me address something important. Some people will say, this is conspiracy theory. They will say the silver market is functioning normally. They will say mints are just having temporary issues. They will say I am exaggerating. To those people, I say, look at the evidence. Perth Mint suspended, US Mint suspended and repriced higher. Royal Mint out of stock, India defaulting on deliveries. Costco implementing purchase limits. Shanghai vaults draining at unprecedented rates. Lease rates at extreme levels. This is not one mint having a bad week. This is every major source of physical silver on the planet experiencing unprecedented stress at the same time. That is not conspiracy. That is data. That is facts. That is reality. Now, there are three types of people watching this video right now. The first type is scared. They see the crash and they panic. They want to sell. They want to get out. They do not understand what is happening, and fear makes them reactive. They will sell at the bottom and regret it forever. The second type is confused. They see conflicting signals. Price crashing, but mints closing. They do not know what to believe. They are paralyzed by uncertainty. They do nothing and miss the opportunity. The third type understands. They see the paper crash for what it is. A manipulation. A shakeout. A wealth transfer mechanism. They see the physical shortage for what it is, a fundamental breakdown of the paper pricing system. They recognize this as an opportunity, not a crisis. They are using this moment to accumulate while others panic. Which type are you? Let me leave you with this thought. The paper price of silver crashed dramatically. During that same period, the Perth Mint suspended sales. The US Mint suspended sales. The Royal Mint ran out of stock. Indian dealers defaulted. China drained massive amounts of silver in days. Lease rates exploded. The price went down. The physical metal disappeared. One of these things is a lie. And it is not the empty vaults. This is what manipulation looks like. This is what a disconnect between paper and physical looks like. This is what happens when a system built on paper promises confronts physical reality. They crash silver. The whole world is running out. And you get to decide which side of that equation you want to be on. Subscribe to Finance Currency right now if you have not already. Hit that notification bell so you never miss what comes next. This situation is evolving rapidly, and I will continue to bring you updates as events unfold. Drop a comment telling me what you think. Paper or physical? Who wins this battle? I read every single comment and I want to hear your perspective. Share this video with someone who needs to see it. Someone who might be panicking right now. Someone who might be about to make a mistake they will regret forever. The information in this video could change their life. Remember what I said at the beginning. The price is crashing, but you cannot buy the product. That is not a market. That is a magic trick. And now you know how the trick works. This is finance currency. Because the real story is never on the surface. I will see you in the next one.